Welcome to the Double Indemnity podcast. I'm your host, Toby Clegg, alongside my co-host, the legendary Stuart Reid, and today we're overjoyed to be joined by Vivek Banga, who is the CEO of Polaris.
Managing Director.
I promoted you already. There we go. Well, didn't I tell you about the promotion last week? Oh, was that new news? Oh, we're joking. No, Managing Director of Polaris. But welcome today. And just to kind of start us off, Polaris is one of the, I don't think it's fair to say the great secrets of the industry, but it's one of the core pillars that we don't necessarily appreciate or hear of too much. So could you give our listeners and viewers a bit of an insight into just what Polaris does and everything about it?
So when I joined Polaris in 2019, I described it as the industry's oldest insurtech, even before the term insurtech was actually coined. So we are now 32 years old. Well, not me, but Polaris, 32 years old. And it's a great example of how the industry can collaborate when it needs to for the right sort of things. So basically, when the internet was coming about, the insurers got together and they felt we need something in between which helps us get the best out of the internet. And that's how Polaris was born. So effectively, when it comes to digital trading in our industry, both in personal lines and commercial lines, Polaris is really deeply embedded within the industry. Insurers, brokers, software houses, price comparison websites, all of them interact with Polaris and its services, and across personal lines and commercial lines. So to give you an example, if you're a broker using your software system and you're trying to get property owners' quotations, you are answering questions within your system that have been built on Polaris standards. Similarly, if you as a retail customer, you're on Confused.com or Money Supermarket trying to get a home insurance quote, again, the questions that you're answering are based on Polaris standards. Now, behind the scenes, when insurers are returning those quotations, they are coming out of a rating engine called Product Writer many times, not always, but several times, and that rating engine is again provided by Polaris. In the commercial lines world, we've got a gateway called iMarket that connects insurer systems to broker systems. And that does about half a million policies every year. And also, as a broker, you can initiate a conversation with an insurer using a tool that we provide called Live Chat. And that's a fully auditable conversation and everything. So you don't have to call the insurer to clarify something related to a commercial lines risk. So every element of digital trading within personal lines and commercial lines, we are there helping the industry, progress in this area.
So many questions. We only have a short period of time, but obviously, Vivek, you and I have worked together. We got on very well, and I'm extremely proud, however condescending that might sound. I'm very, very proud of what you've done at Polaris.
Thank you.
And success breeds success, right? So, you get one insurer, then another insurer comes along. The way I look at Polaris at its most basic, it's a data dictionary. You're ensuring that everyone speaks English rather than French, German, Spanish, call it what you will. I guess your particular brief is to bring so many different parties together with that data dictionary. So presumably actuaries with Theo and insurers like Aviva and brokers such as Clear. And then your job is to try and persuade everybody that there's a huge benefit to utilising Polaris. Do you feel that journey is now complete, or is it constantly building on the success that you've had to get new partners in, be it software houses, be it insurers, be it brokers, be it MGAs? Is that still a major part of it?
It's still continuing, because the way digital is evolving, I can't say that the journey stops at a specific point. Data standards, they are the starting point for Polaris, because the name itself says it all, standards. So it helps everyone, as you said, speak the same language. You can transfer data across systems and so on and so forth. But then the work that we do on the rating engine side of things, that's equally important, because rating complexity has grown in our market to a huge extent. Machine learning became really popular 6 or 7 years ago. We now have clients who are using machine learning based algorithms for rating rather than just use simple spreadsheets. More and more complex products are getting digitized as well. So if I look back at digital trading, and I started in this area in sort of 2005, 2006, so nearly 20 years, we went through a stage which was just getting acceptance, where brokers, such as yourself, Stuart, would say, well, why bother? This is never going to take off, and so on and so forth. And to use a hackneyed phrase, I think there was a tipping point somewhere around 2015 or so, when the conversation changed from why do digital trading to why not do digital trading. And so there was growing acceptance. Then there was growth, so things like liability products, property owners, car and home insurance, obviously, all of them were rapidly digitized. And now we are at that stage where things are becoming more complex and more nuanced. So you're seeing more commercial combined, you're seeing more mini fleet. People are saying, how do we push the envelope further? How do we get more complex risks through the digital pipeline? Because it might not be a simple case of getting an instantaneous response from an insurer like you can for a simple liability risk. But if you can automate the entire process around a complex risk, and then even if the underwriter takes a couple of hours to look at the submission, come back to you through digital channels, that is still hugely more efficient than trying to do everything manually. So it's almost continuously pushing the boundaries. So referrals used to be a bad word in the industry, that, oh, I can't wait for a referral sort of a thing. But if you're underwriting mini fleet or commercial combined through digital channels, brokers are quite understanding that, okay, there's a referral because it's a complex risk. And as long as the underwriter comes back in a timely manner, that's okay. So it's that sort of evolution where things are getting more complex, more nuanced. And if you look at the entire commercialized GWP in the market, I still think we are scratching at the surface. There is a lot more that can be digitized.
One of the things is Britain suffers from a productivity issue. And is this one of those instances where you're a real contributor to our productivity as an industry, because you've not harmonised fully, but somewhat standardised, commoditised and harmonised, I suppose is a combination of those things, to actually make it more productive, because then they're not trying to go on an outlier. It's always that kind of notion that the proprietary nature of data and everything, as people are sat there, would mean that they want to ask cleverer questions or they want to stray from these question sets. Is your role in some respects to herd them towards look, this is acceptable? Because invariably, if they are going to data transfer, if they're going to have a risk that sits there with one carrier, if it's, put it this way, if it's good enough for Aviva, it should really be good enough for AXA.
Yeah.
Is that a fair...
Yeah. Herding is a word that comes up in our board meetings.
Herding cats.
So our board meetings are quite an interesting sort of construct, because you've got companies which are competitors in the market. They are sitting around our board as shareholders in Polaris, acting in a collegiate manner for the benefit of the industry. And obviously there's a huge competition law statement. All our board packs start with that. So within the boundaries of competition law. It's fascinating to see how they almost have to drop their individual insurer hats and wear a Polaris shareholder hat and say,
insurers being collegiate, my goodness.
What is? Yeah. You'll be surprised. Come and listen to one of our board meetings. And
I'm kind of seeing you remember The Godfather 3, where you have all the families, the Gallaghers, everyone else sat there, ostensibly like massive competitors, but suddenly.
In this case, thankfully, no one is making an offer the other one can't refuse. But it is people thinking what is good for the industry and what is good for digital trading within the industry. And your observation is spot on, Toby, that do we really need to ask all these questions?
Yeah.
We, as an experiment, we sent one of the universities, I think it was University of Essex, we sent them one of our question sets and some data from iMarket with the consent of iMarket insurers, and obviously, with any identifiers removed. And they ran it through some machine learning algorithms. And they actually came up with a few questions which they said, you know what, these questions add no value whatsoever to the actual pricing of the risk.
Yes.
But it's there. It's there because, and that is one of the challenges of digital trading. Because we started in the UK so many years ago, effectively what we did was we said, these are manual underwriting guides. Here's a shop guide, here's an office guide, here's a property owner's guide. Now let's digitize them. And we digitized them. Now the benefit of that was, it was familiar. It was familiar to brokers, it was familiar to insurers, so adoption was quicker. But the problem is, we have not thought in today's day and age, how's technology going? And would you really start with saying, okay, here's a shop guide, here's an office guide, let me digitize that? Or would you do things differently?
Yeah, because it starts with a commercial combined policy, and it should almost work back. There's always an argument about Lloyd's is if you've got the bordereau, which is international in scope, but it could be just UK SME that's written through it or whatever, there's a lot of blank fills. But at least if you start with the border, it then gives you the information they need. And I've always found it quite funny, having sat on an insurance company board before, that we were focused on Solvency II, and some of the information that flowed through to even the reinsurers was not that necessary. They didn't really want to know
but it was
everyone's
always
inside leg measurement, but it was just there, and you think a lot of this is totally incidental. I've got one question, which is an interesting one. I don't know if you've ever come up with it, only because I was speaking to a senior underwriter last week, and it's this notion of the capture point of occupations. I know this sounds quite niche, but it's actually quite a fundamental one.
Yes.
His example being, he quoted a risk where they were an ice cream manufacturer, 500,000 of stock, blah, blah, blah. But they managed to squeeze it through as an ice cream shop. Now, the rating of that was somewhat different, as you can imagine, especially the ruination of product. That's never really been answered off. And I know it's something that, obviously, you guys, with your data cleansing, how do you tackle niche areas like that? I mean, is it a continual journey to try and stop those avenues of abuse?
Yeah, and new occupations get added, and old occupations which are no longer in use get retired all the time. Our occupation list is, I'm guessing here, might be 3,000.
I'd imagine it would be, yeah.
We actually got approached by financial services organizations outside the insurance world to say, we don't need to reinvent the wheel. Can we use your occupation list? And we saw this especially during lockdown years, because suddenly lending organizations got a little bit more sensitive to who they are lending money to, etc.
Apart from the government.
And they wanted more granularity around occupations. So this is where our advisory groups tend to do a lot of work. So if you look at standards, they've got one advisory group for personal lines and one for commercial lines. And part of that group's remit is to continuously evaluate and retire some of the occupations. I'm trying to think of an example.
But it's a good, it's really interesting to hear, because that is one of the things where insurers are frightened by the exposure that they have. When we talk about underinsurance, talk about other things, but that tends to be a niche that I'm hearing more and more. There's a lot of sins hidden within that. And it's quite interesting that the industry can collaborate to actually do that, because otherwise you're kind of reliant on application fraud and third-party elements. But actually, if you've got an industry standards driving that,
presumably you get support from the ABI. I mean, I don't know that.
So they used to be called ABI lists initially, and then they were transferred over to Polaris. So now it is completely within Polaris's remit and the advisory groups that we work with. But to answer your question, Toby, the intellectual capital is not in that occupation list, which is why it makes sense for the industry to collaborate and say, here's a standardized list. The intellectual capital and the real competitive edge is, how do you rate it then? And that we have got no visibility of, and no insurer has got any visibility of another insurer's rating strategy.
They usually just cut each other's, like they just cut it down 5%.
We're old enough, you might not be, but we're old enough to know that, you remember when you used to drive abroad, you had a green card, and in there was one claim form. For all insurers, and you used to think, well, if you could do this on claim form, you could do it across the whole thing. The discussion point I seem to be getting from the brokers, which is becoming a huge frustration, is that all these insurance companies have portals. So, but the trouble is, there's no, you go to Intact and you put all the information in for a quote.
Then you go to another.
And then you go to Aviva and you put all the information in a quote. They might be putting it using your data dictionary or whatever, but I don't know. Do you foresee a time when that might be more collaborative?
So, extranets versus software houses, that's a debate. I think 2005, 2006, when the first survey was done, it was a question even then. And it's a question even now. We've not solved it, have we? Because we haven't solved it. And again, the reason why it hasn't got solved is because everyone was digitizing. So everyone came out with their own digital strategy. And while we provided the standards and the rating engine, etc.
It's their fault.
It's no one's fault. I think it's just the way the market has evolved and the way technology was. In an ideal world, and given the way technology is going, what you would want is all the insurer systems and broker systems to only hold data and to hold a record of all policies that have been bought, compliance, accounting, everything can happen. And you have a digital layer on top where all the digital stuff can happen, and that would be connected to third-party data sources that can get the best out of AI, machine learning, you name it. Today, if you were designing a digital infrastructure for this industry, that's the way you would design.
And are software houses looking to move to that?
No comment.
I'll phone Theo up, shall I?
It is an interesting one because I'm going to say something a bit controversial now, but I think it's fair. We're a bit of a poor relation at times.
You meaning?
The insurance industry. Ironically, for such a mega, huge industry, we don't get fair billing sometimes on IT. So if you think, I always take this joke, if you took MIT and took a graduating class of 100, top couple go to Google, next couple to I don't know, NSA and a few others, and obviously entrepreneurs, Facebook, blah, blah, blah. I reckon if you then said like banking might get some, at the very end, the two guys are probably saying, oh, get into insurance, I guess, it's all that's left. Yet there's such a mega pot of a prize there. Yeah. And as someone who's obviously buggered up digital transformations in my time and got some of them right and some of them wrong and very expensive ones, we had to go through that proprietary nature of building a whole new system, which was really difficult. And ultimately it didn't work, right? And it cost us millions, and it was a horrible situation. But of course, we were egged on by advisors, egged on by one of the big four as usual, the usual consultant stuff. Yeah. When you look strategically, and what I'm kind of getting at here is when you look strategically at the digital infrastructure, because it's such a key part of the industry going forward, is there too much of a disconnect between practitioners such as us and admittedly your world, which is more now obviously the software side, the practitioners and others doing that part? Is there too much of a gap? Do we need to kind of come together? What is the magic sauce where you see a project really running well in the future?
I think the practitioners, as you called them, and the technologists, without a doubt, they need to work together in any successful project. Yeah. You know, if you look at, if I reflect on my years at Gallagher, for example, which was my first exposure to the broking world, I worked with a lot of brokers within Gallagher who were then working with Lloyd's syndicates, getting capacity from them, agreeing policy wording, etc. Yeah. And then we were placing that product on a digital platform and maybe distributing it in America or Canada or wherever, or in the UK. Now, when you look at a project like that, you have people who are specializing in their own areas, but they all have to have alignment in terms of saying, what is it that we are trying to achieve? Yeah. And what is that which this project is trying to deliver? Technology in many ways is the easy part, because getting software is not that hard. It's making it do what you originally set out to do, which is the difficult bit. And usually it's difficult because many different groups within a project are themselves not clear. What are we trying to do? I mean, I've had these discussions on big digital transformation projects, and I have to say my view is at the other end of the spectrum, where I always get a bit skeptical when I hear digital transformation. You know, what does that even mean? It's a digital evolution.
Especially for those of us who've been once bitten, twice, or thrice, whatever.
Yeah, you do a business case, which is, you know, a few million and everything, and it will break even or deliver in the 5th year or something, and then technology changes, life evolves, etc., etc. I've always been a believer in, you start with a proof of concept. You almost light a small fire first. You know, you prove that this is working, and then you start adding more to it. The best projects that I've seen, they've all evolved over a period of time. You know, you digitize one product, and then somebody who champions a different product comes to you and says, well, if that can happen for that product, why is it not happening for mine? And then you add another product and another distribution channel, and you keep evolving in that manner. But at the same time, I can see why digital transformation projects have an appeal, because it's easier to make one business case and get all your resources and project managers and business analysts, etc. But personally, I'm a bit skeptical of that.
Insurers are in a constant digital transformation, aren't they? And it never seems to come to anything. So would you say, we're running out of time, would you say that your strength and your weakness as a business is the fact you have so many stakeholders to try and bring together? You've got an enviable investment from the insurance market, from the broking market.
Unique.
Unique.
Totally unique.
And to be commended highly for it, but trying to get these people to work together, is that your biggest challenge and your biggest benefit?
Yeah, I won't call it a weakness. It is a challenge, of course. Yes.
Forgive me, challenge.
And it is definitely a strength. You know, we are different from any technology vendor in the organization. And also we are neutral. We are unbiased. We can give a neutral view. And in fact, we say we are industry-owned, industry-wide. Where it is a challenge is, you mentioned digital transformation programs earlier. We might want to work with half a dozen insurers, but every one of them is at a different stage in their own strategy.
Great point.
They might be buying some other companies. They might be integrating other companies. They might have a rethink on their distribution strategy. It's how do you then try to deliver something with multiple stakeholders who are all at different stages in their evolution. But if I look at the investments we have made in the last 6 or 7 years, we have shown that it's possible, and we have continually invested. Whether it's on the rating engine side of things, whether it's on iMarket, whether it is upgrading standards, we have continuously invested, which means there is a way. And largely that has happened because a few insurers would always put their hand up and say, yeah, let's go for it. And then some other will follow. The industry also is an observant industry. If you see someone, you see someone who's making a success out of something, people are likely to follow. So to that extent, things have happened. When I was taking this job, somebody did say to me that, oh, you will find that anything you need to, the smallest change you need to make, you will be making it by committees. But what I've found is working for a small company to be strangely more liberating than working for a large company. Because I've worked in large companies where you sit in meetings and you sit in committees and everything.
Never closure either, is it? It's always a compromise.
Whereas in small companies, you can actually take decisions much faster. We have popularized the concept of proof of concept within our shareholder community, within the insurers we work closely with. And usually that's a good way to get started. There's always a willing insurer who wants to try it out. And we always say that this is with the caveat that you're helping evolve technology for the industry. So we will then offer it to others as well.
Not copyright.
I mean, machine learning is a classic example. Machine learning, the whole suggestion came to me from a very large user of Product Writer who is very active on price comparison websites. They do a lot of business. And they said to me, well, this is the way the market is going, we think. And we helped them with a POC. We got the software developers in Bangalore to work with them and build that POC. And after that, a few other insurers started using machine learning algorithms as well. But all that we did was we made the rating engine compatible with machine learning. We never said to them, you should only use this version of machine learning. They could use whatever they wanted to use. And we had no business seeing what is inside those algorithms because that's their secret sauce. And that's for them to, get the best out of the technology.
Vivek, you're enjoying it, aren't you?
I am enjoying it, of course.
The job is challenging?
It is challenging, but it's good fun because it gives you a complete view of the market, the digital trading infrastructure in the market. I worked with 2 insurers on digital trading side of things. I worked with one of the world's largest brokers. And now to be working in an industry-owned organization where you can see digital trading across the entire industry, its strengths, its challenges, its frustrations, I think that's just fantastic. It is quite a unique company.
Don't fancy challenging Lloyd's and Blueprint too, though? No, you're not going
Blimey. I have worked with Lloyd's syndicates where we have taken their capacity and placed that on a digital platform. And some of the Lloyd's syndicates actually do use our rating engine. I think individual syndicates, yes, but
hey, it's a big challenge.
It's a matter of time, isn't it?
We're going to see if we can get that gentleman in sometime, aren't we?
That'd be interesting. We usually end by asking a question. Do you have any thought-provoking or controversial even ideas or a thought that you'd like to leave our listeners, our viewers with, based on your career or your insights at the moment?
If I look at my career in the insurance industry, I always think this is an industry that just offers you various opportunities as long as you're willing to take them. And they might not come in a very structured manner, but they're there for the taking. When I moved into commercial lines digital trading, as I said earlier, there were question marks. Why bother? Why do it? But, the company where I was supportive. We got the investments. And from there, my career has just, expanded and I've tried various things within the industry. I think that way it's a fascinating industry. I mean, technology will keep making an impact, but probably, and you might have heard this from others on this podcast as well, it's one of those industries that values human interaction and human contact above everything else. And I think that's what makes this industry so fascinating. That let's do what we need to do on the tech side of things, but let's not forget the value of relationships, forget the value of conversations within this industry. And the best projects are projects where people trust each other. They can have a healthy debate, but they can also go and have a beer afterwards and have a good laugh. Like Stuart and I did in Bangalore.
I was about to say, do you know what you took words out of my mouth?
Let's not go into that. Let's not go
Driving tuk-tuks.
right.
No, only Stuart drove that.
Why does that not surprise me?
Yeah, and we don't auto-rate tuk-tuks through a product writer.
He'd try if he could.
Yeah.
Vivek, thank you so much for coming in
Yeah,
today.
Thank you for inviting me. It was a
Hugely
pleasure.
enjoyable, and what a unique setup you have. Absolutely fascinating.
Going really
It's
well.
a
Well
progressive
done.
industry that decided to set it up. So I'm only thankful to the industry
One
for
of the
doing
rare
that.
occasions we do, huh?
Yeah,
There we
hey,
go.
let's celebrate that.
Let's celebrate that. So thank you very much to our listeners and our viewers as well, and thank you for attending, and we will see you next time.